don't bet against this market, gang, but do we want to look at all the symbols with the same amount of optimism and bullishness? And that is not where we are right now. So when we talk about the market, normally traders are thinking about the S&P. And when we think about the S&P, we're really thinking about the tech corner of the market. That's Apple, this is Microsoft, financials, and lastly, healthcare. So what's neat about the S&P, the reason it often becomes simply the barometer for all things stocks, is because it's weighted with three of the sectors that are represented in the NASDAQ, the S&P, and the Dow. So it becomes a good combination. But combining things is not always going to serve us. I'm going to show you why, starting with healthcare. Healthcare has been the laggard. And healthcare has been the laggard because many of the stocks within the XLV sector are not in uptrends, not above their 200 exponential moving averages. And you can see healthcare is down on the year. So this is going to hurt the S&P in the same way that a cylinder misfiring in an engine is going to hurt the engine. Can it keep limping along? Well, I would hardly call the S&P limping. So how come the XLB is not going to keep things from moving higher? Because there are two far bigger cylinders in this motor, tech and financials. And both of these are well on their way. Tech has been in an uptrend. The NASDAQ is at a new high. And this is where the NAS and the S&P overlap. And this is why I say you don't want to bet against higher highs if you know where to look. Now, I'm not ruling out the Dow. However, the S&P and the NASDAQ are performing in a way that should serve traders better to the long side than the Dow. And I'd say the missing cylinder in the Dow, in addition to healthcare, is energy. Energy has definitely been one of the reasons that the Dow is not keeping pace with the NAS and the S&P. And of course, there's regional banks reminding us that while the Russell might be trying to go positive on the year, regional banks might have a little something to say about it because this is the number one weighted sector. So whether you're a trader of stocks looking up the food chain, stocks, sectors, indices, or whether you're a futures trader looking at the indices to sectors to stocks, that cohesion is really important. And that's why the NASDAQ will continue to outperform. And I would throw the SMH into the mix. Let's wait for NVIDIA to settle down after earnings. And I'm going to go right back to buying SMH pullbacks as we did mid-month, and looking to do it again if we can sink down into the daily price movement range. If you haven't yet checked out, by the way, the daily price movement range, and that's on sale right now during the Black Friday, please do, because when traders ask me, hey, Rog, I've been wanting to check out your hourly price movement ranges, your daily price movement ranges, they're on sale now, so 30% off. That's the way to go if you've been wanting to kick the tires on these tools. And then the last corner of the markets that I'm looking at is bonds. And bonds continue to be in an interesting place. And this is where I'm both optimistic about bonds, but terribly concerned as well. Our bond yield's going to continue to be, for the most part, stable, as broadly we're expecting the FOMC to be dovish in 2024, at least one, if not two, rate cuts by the July 3-1 meeting. Absolutely. But let's look at bonds as a ripe place via TLT and IEF and other bond funds to be sold off a bit in the tax loss harvesting. It's not positive on the year. It's not above the January 3 close, and it's not even above the 200. So while into next year, I do want to get long bonds, I don't want to get caught up in what is likely to be some tax loss harvesting, aka weakness, in this corner of the markets. All right, so let's be specific. Even though we use the jargon, the markets, a lot, let's be specific about the indices and the sectors and even the stocks that we're looking bullishly and bearishly at. And then also remember, as we go into December, strength will get stronger. That's window dressing. Weakness will get weaker. That's tax loss harvesting. And we're going right into that season as we enter December. Let's not overlook the end of the month, meaning November. But for the most part, it does seem a lot of these courses are set. Likely not a lot of miracles going to happen before we wrap up the month of November. Hope everyone had a wonderful Thanksgiving. Very thankful for you all to be a part of the Simpler community. We'll keep it nice and short today. If you did not watch the previous video from Tuesday, I went into a lot of detail about what it is I'm going to be doing going into December. So I thought I'd just let everyone get off to an early start on the weekend, hopefully with family and friends. And last F1 race of the season. We've got Friday football with the Dolphins and Jets. Lots going on. Tryptophan is real. Like I said, I hope everyone had a wonderful, wonderful day off and we can finish off the month strong and kick it into December. I'll see y'all in the next update.